let's talk about the unified tax credit, or they call it the unified gift tax credit that applies to gift taxes and estates. So essentially what it is, it's a bucket of tax credits that you can use, right? So I think about it as almost like a container, right? That container is currently sitting at $13.99 million, and obviously that can change with rules and regulations, but I want you to understand it in a nutshell. So it applies to gift and estate taxes. So what does that mean? Let's just say estate taxes apply to someone when they die. They only really apply to rich people. So for example, if you never give any gifts and you just die, you have $13.99 million of your estate that's going to be completely not subject at all to estate taxes. Once you pass the 13.99, then it could come into play. Then people take advantage of like irrevocable trusts and stuff like that to remove that income from their estate, right? Now, how do gift taxes work? Gift taxes are, well, currently the gift tax limit is $19,000 in 2025, and there's certain, things you could take advantage of, like with the 529, you could super fund it, 5x it, like $95,000, without triggering gift taxes. But otherwise, if you're going to give someone, money or securities, if it's more than $19,000 in a year, unless it's a U.S. citizen spouse. If it's a U.S. citizen spouse, you can gift them as much money as you want, and same thing goes with the whole, just with U.S. citizen spouses, you can gift them as much money as you want. There's no limit, right? Otherwise, the limit's going to apply for everyone else, unless it's a U.S. citizen spouse. Now, let's say you decide to gift your sister, let's say, call it $50,000. Now, you're only allowed to do $19,000. Once that $19,000 surpassed, there is a tax liability due, right? So it would be $31,000. 50 minus 19 is 31. So there's two options. You can either pay it now, which most people don't want to do, or you can take it from that bucket, that $13.99 million bucket. But the problem is, as you can naturally imagine, that also applies to estate taxes. So if you're slowly taking out money from that bucket, now you have less that's going to protect your assets when you die, so more is going to be subject to estate taxes. So let's say if you use up that entire bucket, now as soon as you die, all your entire estate will be subject to estate taxes. So you got to be careful with that. Now, there's a natural reason why they do that, right? Because otherwise what people would do is they would just gift a ton of money to, people who are wealthy would gift a ton of money to people who they know, right? Their family and friends. And now their estate just became tiny, right? Now they get to use that full $13.99. So they see, hey, and I know the game you're playing. So you can still play that game, but you'd have to use irrevocable trusts, right? Which come with their own caveats. But just keep that in mind. So it applies to both gift and applies to estate taxes. Now, theoretically, if you knew a bunch of people that you trusted, you could, and you were worth $100 million, you could theoretically give like $19,000 to like 1,000 different people, but I don't think most people really trust 1,000 people. So that's another one that people are like, oh, what if you do this? So that's how that, that loophole kind of gets closed a little bit. So hope this helps. Please like and subscribe and listen for more. Thank you very much.